John Deere recently declared that it is expanding strategically by moving a portion of its manufacturing operations from the United States to Mexico. However, U.S. President Trump doesn't believe it. He is calling the action a betrayal and threatens to impose a 200% tariff on beer imports made in Mexico. Farmers, legislators, and investors in America are preparing for the repercussions. This goes beyond business. It's a major economic hotspot. What caused the shift then, and what follows? Hold on tight. These are the 5 main takeaways from this crucial machinery stalemate. Why Deere is relocating to Mexico is the trigger. Why Deere is relocating to Mexico is the trigger. More than just a straightforward expansion, John Deere's $55 million investment in a new manufacturing plant in Monterrey, Mexico, is expected to start production by 2026. This is a change in strategy. Compact track loaders and mid-frame skid steers, which are crucial equipment for small to mid-sized farms, will be produced at the site. What is causing the movement then? Deere points to supply chain bottlenecks, worker shortages, and growing labor expenses in the U.S. Mexico, on the other hand, provides far cheaper labor prices, a growing trained labor population, and simpler access to Latin American high-growth agricultural markets, such as those in Brazil, Argentina, and Colombia. Deere is not the only one. In the face of inflation and ongoing disruptions from the COVID era, industry peers AGCO and CMH Industrial are likewise modifying their processes to remain lean. According to Deere, less than 5% of its operations in North America will move, with key pieces of machinery, like harvesters, remaining in Illinois and Iowa. That guarantee, however, did not lessen the impact. Given that the news coincided with possible plant closures in rural America, many questioned the company's commitment to critics. To Deere, it seemed like corporate strategy wrapped in treachery. Surviving in a globalized society is all that is involved. However, there were other stories that made news than business survival. It became a political maelstrom because of Trump's response. Trump responds, tariffs are out. Trump responds, tariffs are out. Deere's shift to Mexico quickly became a political hotspot for Donald Trump. He said, "If John Deere builds our machines elsewhere, they'll pay a 200% tariff to bring them back," during a rally in Iowa. It was a clear challenge to Deere's worldwide strategy, not just bluster. For Trump, symbolism is more important than economics. According to him, Deere's change is a betrayal of American manufacturing. His message, continue working from home or suffer the financial repercussions. However, a tariff that high would affect more than just business earnings. Equipment costs could skyrocket for farmers who are already under stress from inflation and high interest rates. Dealerships, repair businesses, and the entire supply chain would be affected. Mexico and other trading partners may respond with retaliation. Trump's congressional allies quickly supported him by proposing restrictions on federal purchases of agricultural equipment manufactured elsewhere. The question of whether these policies benefit workers or harm the communities they are intended to protect is currently being debated in rural America. This impasse reveals a more profound gap. Can domestic industry be revived by tariffs, or do they run the risk of causing more harm than benefit? Additionally, as political pressure increased, Deere's The Story gained greater weight due to financial reality. Prior to going forward, please hit the like and subscribe buttons for us. It keeps you informed about significant changes in the business and expands the channel's audience of car aficionados. Will Deere's revenue decline continue or diverge? Will Deere's revenue decline continue or diverge? The relocation of John Deere to Mexico coincides with the company's existing precarious financial situation. The most recent quarterly report showed a sharp decline in revenue of 35%, which was below the expectations of Wall Street. When financing costs are high and commodities prices are low, many farmers are deferring purchases in favor of renting or buying used equipment. It is anticipated that Deere's precision and large-scale agriculture businesses will see a 20% decline in sales. The used market is booming in the meantime. Large tractor postings increased by 40%. According to Tractor Zoom, indicating a general downturn in the demand for new machinery. Deere is still hopeful despite the decline. The business anticipates a net income of up to $5.5 billion by 2025 and is focusing on automation and cost reduction. Investors seem to concur. The stock stumbled briefly before bouncing back. Strategically, Deere is turning its attention to the outside world. Despite growing local issues, it is able to operate globally since more than half of its agricultural and turf exports now travel to Canada, Europe, Brazil, and Australia. The business is balanced and treading carefully. Domestic political backlash combined with a larger drive for worldwide efficiency. It remains to be seen if that gamble pays out. But money isn't the only factor. Directing the upcoming chapter of Deere, the company's future is being reshaped by technology even more. Automation driven by Deere. Intelligent machines, quiet work. Automation driven by Deere. Intelligent machines, quiet work. While discussions about tariffs make news, John Deere's innovative technology is subtly revolutionizing farming. By introducing AI-driven equipment, precise sprayers, and autonomous tractors, the company is placing a large bet on automation and promising smarter, leaner agriculture. Its invention in the headline, using GPS, LiDAR, and AI, the 8-hour autonomous tractor can navigate fields with pinpoint accuracy without a driver, while cloud-based software modifies spray patterns in real time to save waste and increase production. Drones identify pest outbreaks. Deere's operations center powers all of this. Fleets can be monitored by farmers using a digital dashboard. Conditions of the soil and the health of the equipment directly from their phones. Deere is even using Starlink connectivity in Brazil to connect to far-flung agricultural areas. Here's the catch, though. Whether they are constructed in Mexico or Iowa, these machines don't care. What counts is performance, not location. And as automation increases, employment loss, rather than outsourcing, is the true disruption. According to Oxford Economics, robotics could eliminate 20 million manufacturing jobs by 2030. Mexicans are not taking the place of Americans at Deere. People are being replaced by machines. Now, the actual query. When tractors drive themselves in the future, are we preparing workers quickly enough? However, the public's perception of this change could influence Deere's trajectory just as much as the technology underlying it. Political pressure and public perception are two separated fields. Political pressure and public perception are two separated fields. For many years, John Deere has been a mainstay of rural America, a reputable brand that has been engraved on fields, barns, and farmer generations. However, that trust is beginning to erode with its relocation to Mexico. In local town halls, radio call-ins, and agricultural forums, there are differing views. Deere is adjusting to thrive in a global environment, according to its supporters. Its detractors claim it is ignoring the very neighborhoods and workers who created its heritage. Why Mexico and not Nebraska? Posed a direct question to one farmer. There is increasing political pressure. Legislation to limit federal purchases of agricultural equipment manufactured abroad has been sponsored by Trump allies in Congress. The administration is investigating tariff policy linked to domestic production, and hearings on Deere's plan are underway. Deere's lobbyists, meanwhile, are resisting, claiming that tariffs will do more than merely reduce company earnings. They will disproportionately affect farmers by increasing the cost of machinery at a time when the demand for food is growing worldwide. Deere isn't backing down just yet. No reversals, no excuses, just a march on, steady. This is more than just a factory dispute. It's a more profound conflict about what rural America ought to look like in a world that is changing quickly. And that brings us to the larger picture, the more profound change that is subtly changing the true meaning of American industry. Final drive, the confluence of tradition and change. Final drive, the confluence of tradition and change. Trump's threats of tariffs weren't the only reaction to John Deere's intention to grow in Mexico. It brought attention to a more significant reckoning. This is a move by multiple companies. Economic progress and the longing for the heyday of American industry collide. While one side advocates for bringing jobs back home, the other is focusing more on innovation and expanding internationally. Can both, however, coexist? Or are we witnessing the gradual decline of the era of the assembly line? The response could influence how rural America defines its future, as well as Deere's course. We want your opinion on this before you leave. Even if it means losing money, should businesses like Deere be forced to manufacture domestically? Do you think jobs will be threatened by automation, or an essential modernization to sustain farms? Lastly, which do you believe is more aware of the current state of the economy, Trump or Deere? Please share your opinions in the comments section below. We would be interested in knowing your perspective on this matter from the shop bench or behind the wheel.